You're listening to Geraldine Lamb, Capital Markets and Investment Banking Editor of The Banker magazine, talking to Brian Kaplan, Editor of The Banker magazine. So Brian, now that the top 1,000 World Bank's ranking has been released, what have been the headline figures so far?
Well, obviously, as you can understand, this year's top 1,000 World Bank rankings, which at The Banker magazine we do every year in July, has attracted the most interest of any ranking ever before. And the bank with the biggest Tier 1 capital in the world is JP Morgan. And that's not so surprising, really, because when you think about the consolidation that's occurred post the crisis, and JP Morgan acquired Bear Stearns and Washington Mutual, that's what's propelled it to the top of the ranking. And similarly, the bankers' ranking has been reshaped by the consolidation. So we've got Bank of America in second place. It took over Merrill Lynch, of course. And one of the biggest movers has been Wells Fargo, which went from 23rd to 6th place. And of course, it took over Wachovia. And the shape of the ranking is still that it's dominated by these big international players. And though there are 4 Chinese banks in the top 25, it's still very much dominated by OECD countries, by America, Western Europe, and Japan. But of course, the story behind those rankings is that in profits, there has been some devastating results. So profits for the whole top 1,000 have fallen by 85% between last year and this year. And some of the banks have been particularly badly hit. Royal Bank of Scotland shows the worst losses of any bank in the world. And interestingly, Royal Bank of Scotland also has the largest assets of any bank in the world. So you start to see that banks that have expanded perhaps too fast in the boom years ran them into trouble in the crisis and are paying the price for that now.
So it's interesting when we're looking at the sort of devastation that's been wrought in terms of profitability, why there's actually so little change in terms of Tier 1 capital. In fact, in terms of the composition of the top ranks, especially in terms of their levels of Tier 1 capital, it's still dominated by big US and European banks, as you say, with the sprinkling of Chinese and Japanese players. So why is there so little change?
Well, I think what it is that banking is a very unequal business, and banking perhaps reflects, a long period of economic growth rather than a sort of quick burst of development. So we've seen countries like Brazil, Russia, India and China developing very fast over the last couple of decades. But the countries that still have the big banking giants of the world are the most advanced countries in the world, like America and Western Europe. And banking is just very unequal, and you have these huge banks that are much bigger than other banks in the world. So even a bank like Santander from Spain, which comes in 10th in our Tier 1 capital ranking, which is a major bank with a big international presence, in Tier 1 capital terms, it's still half the size of JP Morgan. And those top 4 or 5 banks, JP Morgan, Bank of America, Citigroup, Royal Bank of Scotland, HSBC, really do dominate the world banking scene. Of course, one might add that is it an advantage to have a banking sector that size? I mean, what we've seen over the last few years is that maybe the banking sector in some of those countries got out of kilter with the size of the economy. I mean, if you looked at stock markets, they were dominated by financial stocks. And in some ways, we're going to see a period now where I think the banking sector has to get back in line with its true worth to the major economy.
I mean, presumably, certainly banks like RBS, which have taken serious amounts of government capital, presumably they're now under pressure to pare down their business, to simplify structures, to perhaps even retrench from overseas markets. So presumably next year we might see some more significant changes in terms of the top 1,000.
That's right. Of course, it depends on what the chief executives of the banks that have received government support do. It's a little unclear, I think, at Citigroup exactly the route that's going to be taken. At Royal Bank of Scotland, the new chief executive, Stephen Hester, has said that it's his aim to make the bank, pull it back from its international operations and make it mainly a domestic player. And if he does succeed in doing that, it will certainly involve shrinking Royal Bank of Scotland's balance sheet and it will certainly mean their operations are much more UK focused and perhaps less involved in the wholesale capital markets as they have been over the last couple of years. I mean, I think it's a big question for the UK banking sector because, I mean, we did in the UK have these big banks that were dominant on the world scene, HSBC, Barclays and Royal Bank of Scotland, and this was one of the UK's most competitive areas of economic development. So it would certainly be a change in strategy quite profound if now the banks were going to be much more domestically focused.
It doesn't offer them much opportunity for growth in a
No,
mature market like ours.
Well, that's exactly right. And of course, the problem for banks in general is going to be that it depends on what the regulator asks them to hold in terms of capital. So the noises we're getting from both the United States and the Financial Services Authority here in the UK is that banks are obviously going to be required to hold much higher levels of capital. And indeed, in the rankings, we're starting to see them up to 9 to 10% of Tier 1 capital now, which is much higher than the Basel requirements. And if that's the case, then the returns on capital are going to be much, much lower, and they're going to be less exciting for shareholders to hold going forward, even if there's fairly steady economic recovery.
And how much difference is there to the top 1,000 if we remove government capital from the equation?
Well, there's certainly some difference, but it's not, again, as radical as you might expect. So the two banks, or two or three banks that have really received a lot of government support, so Royal Bank of Scotland and Citigroup, I mean, they do fall 3 places each if you take out government capital, so they come in 6th and 7th. But I mean, in some cases you might have expected it to be more, but I still think, again, what it shows is, how big these banks are and the kinds of Tier 1 capital levels that we're looking at, even before the support from the government. I mean, they're massive institutions, and their Tier 1 capital still is much larger than most banks around the world, most average banks in average economies. And that will be the case, as I say, unless a real strategic decision is made to rethink the way they operate.
And in fact, of course, the whole regulatory pressure is pushing them to increase their capital. I mean, there's been an absolute capital raising bonanza over the last year, and it's largely, in fact, not from the government. It's been mainly from the capital markets. When you look at the actual, something like, I think the total losses that we have printed is something around the 1 trillion mark, and it's 980 billion in terms of capital raising, which has not all come from governments, of course. So that trend looks set to continue.
That's exactly right, yeah. I mean, banks have recovered their ability to issue debt and raise equity over the last few months, over the course of this year, really. And that's obviously a good sign, and it shows that the banks are going to be able to grow again. And some of them have been issuing capital indeed because they've got to cover losses, but other banks have been issuing capital because they're still growing. So, I mean, that's the case with some of the major banks in the emerging markets. They still need more capital just because they need to grow their asset base.
I mean, that's absolutely true. In terms of profitability, I mean, the figures really do tell kind of quite a shocking story. I mean, the US and the big European banks, the big UK banks have dominated our rankings in terms of profitability over the last few years. And now this year, it's been an absolutely massive change. And for the first time ever in the rankings, 39-year history, the top 25 banks have made, on aggregate, a loss, which is shocking in itself. But all the profits, of course, have, Chinese banks are dominating in terms of profitability, followed by the Spanish banks. I mean, do you see this, particularly the Chinese banks, do you see this as another marker in the shift of power and profitability to the east, as is often discussed?
Well, it might be. I mean, I think the reason the Chinese banks and the Spanish banks have done so well is because they've focused on basic banking business. So in the case of the Chinese banks, they had fantastic opportunities in their domestic market, and they could just do basic banking in terms of taking deposits and lending it out to corporates that were growing very fast. So in a way, they didn't need to get themselves involved in the kinds of subprime structures and excessive leverage and risk-taking that some of the international banks did because they had good margins at home. So I think that, as long as China continues to grow, I mean, they will be profitable and continue to grow with it. Spain is a bit of a special case because the Spanish banks also have come through the crisis remarkably well. And again, it's due to basic banking business in both Iberia and Latin America, but they're also helped very much by a very shrewd regulator. And the Spanish regulator basically stopped the Spanish banks from getting into these structures that were the problems for the other banks. And they also forced them to provision in the good times so that they had extra capital there. Now the market's turned down. Of course, there's still an untold story yet about how much the downturn in the Spanish economy, which is quite serious, and the problems in the property market there will take its toll on Spanish banks in the next 12 months.
And presumably there's a similar potential for downside in China in the sense that, I mean, it's only a few years ago that their balance sheets were absolutely weighed down with non-performing loans, and perhaps one unwanted side effect of a massive fiscal stimulus plan is the potential of the return of NPLs to Chinese banks. I mean,
yeah, I think that's one. I think that's certainly right. One of the interesting things about the crisis has been that countries that experienced a crisis recently, such as Turkey and Brazil, fared very well in this international crisis because as a result of that, regulators were very tough on them and they were very conservative. They held very high levels of capital. And it may be now that the international banks in the US and the UK are learning their lesson. The regulator's going to be tougher on them, and they will become very safe and stable. And maybe, in the way that these things tend to work out, it's the Chinese banks that need to be wary of getting overconfident and lending too much money. Certainly, I mean, China, has had a fantastic growth period, but we can't presume that it's going to carry on in straight line growth in those big leaps forever and forever. And it must have periods where the economy pauses, and that's a time when Chinese banks will have to look at their lending portfolios very carefully.
Do you have any sort of feeling for what do you think the list will look like next year? I mean, for instance, this year we had two surprise entrants straight into the top 25, with Goldman coming in at 13 and Morgan Stanley at 17, having only just become eligible for the list last year when they converted to bank holding companies. But also, I mean, will they stay as bank holding companies now that they're repaying TARP money? Will they quickly see less need to come under the heavier regulation that is required of a commercial bank? Equally, other banks are divesting or will be divesting heavily. For example, Barclays has already agreed to sell BGI. There are rumours that RBS is going to be selling parts of its business. Do you think we are going to see big changes next year to the top 1,000, or is it too early to tell?
I think that's right. I think obviously with the way we put the top 1,000 together, which is from annual reports, there is a certain sort of lag in which developments in the market actually impact on the rankings. However, I think the move by Morgan Stanley and Goldman Sachs to be regulated by the Fed is permanent, and I don't think they will be allowed to go back. And in fact, the days of the large-scale standalone Wall Street investment bank are more or less over. But in other areas, we might see some of the changes that perhaps we'd expected to see this year starting to come through next year. So as you say, a Royal Bank of Scotland might dip lower if it starts to confine its activities. Other banks may restructure and decide to focus on areas that they think are more profitable. Barclays getting out of asset management is an example. And you might see those kinds of changes reflected in the listings as we go forward. And definitely, there will be a continuing rise, I think, in the positions of the Chinese, the Russians, the Brazilians, the Indians, and the other major emerging market banks.
Okay, thank you, Brian.